Imagine building wealth just by investing a few $100s every month. Today, we'll show you how VOO, a simple S&P 500 ETF, can help you do exactly that. In this video, you'll learn what VOO is, how it works, its performance history, and why monthly investing in it is such a powerful strategy. What is VOO? VOO stands for the Vanguard S&P 500 ETF. It tracks the S&P 500, an index of 500 of the biggest, most successful U.S. companies. When you buy VOO, you're buying tiny pieces of companies like Apple, Microsoft, Google, and more, all in one low-cost investment. VOO is managed by Vanguard and has an ultra-low expense ratio of just 0.03%. That means you pay only 30 cents a year for every 1,000 invested. This makes VOO one of the most efficient and affordable ways to invest in the overall U.S. economy. Let's look at how VOO has performed since its inception. Despite some down years, the long-term trend has been strong. Here are VOO's annual returns. 2011, down less than 0.25%. 2012, up 13.47%. 2013, up 29.74%. Now we're talking 2014, up a nice 11.38%. 2015, down less than 8%. 2016, back up again at 9.83%. 2017. Another winning year, up 19.47%. 2018. The first year down more than 8% for the year, down 6.31%. 2019. A nice rebound, up 28.72%. 2020. Keeping the momentum even during COVID, up 16.19%. Despite temporary losses earlier in the year, 2021 rounded out 3 strong years in a row, up 27.02%. 2022, the worst year on record for this ETF, down 19.52%. 23, a nice rebound, up 24.32%. 24, back-to-back years with gains over 20%, up 23.35%. VOO is currently up 0.80% year to date. However, over the last month, VOO is up 5.53%, with a current share price of $541.76 through May. Despite market ups and downs, the average annual return is around 12.68% over the past decade. This consistent growth makes VOO one of the most trusted ETFs for long-term investors. Since VOO's inception in September of 2010, there has never been 2 back-to-back down years. VOO is up just under 4.33% since it opened. If you had invested $100 each month in VOO since September 2010, your investment would have grown to about $45,943 as of June 17, 2024. This represents a gain of 178%. The total invested amount would be $16,500 over 165 months, with an additional $600 in annual dividends. So why invest monthly? Because dollar-cost averaging helps smooth out your purchase prices over time. By investing a fixed amount each month, you buy more shares when prices are low and fewer when prices are high. This reduces risk in emotion-based investing. You also benefit from compounding returns. Reinvesting your dividends and staying consistent can accelerate your wealth over the years. Here's another example. Let's say you invest $500 a month into VOO for 10 years. Assuming a 10% average return, that could grow to over $95,000. The key? Consistency. Monthly investing in VOO helps you stay disciplined and take advantage of long-term market growth. Now let's compare VOO to other investment options. Actively managed funds often charge higher fees and don't consistently beat the market. VOO keeps costs low and tracks the market reliably. While individual stocks can be great, they are also risky and require research. Sometimes even the best research cannot yield great results. That's why diversification is important to guard against risk. With VOO, you're instantly diversified across 500 companies, reducing your exposure to any single failure. Other ETFs might be focused on specific sectors, but VOO gives you broad exposure to all major industries in one fund. Plus, Vanguard's reputation and VOO's high liquidity make it one of the safest and most trusted investment vehicles out there. In 2025, VOO has seen significant trading activity with a 25% share of ETF inflows. While the year is still young, VOO has attracted a substantial $260 billion in inflows. The average volume for VOO is 8.78 million shares as of May 30, 2025. It seems that many more people are seeking stability with their financial decisions and are avoiding as much risk as possible. To recap, VOO offers diversification, a low expense ratio, strong historical returns, and the ability to invest monthly with confidence. If you want to grow wealth steadily and safely, VOO is one of the best ETFs to start with. I personally invest in VOO for my Roth IRA, which is an investment vehicle that I will cover in future videos. I personally think it's a great idea to invest in VOO for your Roth IRA and for your traditional brokerage account. It may take some time to build your investing bankroll, but it is certainly worth it to invest consistently and with what you can afford. Here's a little more information on what stocks make up the ETF VOO. Here are the list of those that have been in the top 5-10 recently. Apple AAPL, the largest single holding, often around 6-7% of the portfolio. Microsoft MSFT, typically the second largest holding with a weight around 6%. Nvidia, NVDA, usually in the top 3, holding a weight around 5-6%. Amazon AMZN, a substantial holding, typically around 3-4%. Meta, generally the 5th largest holding with a weight around 2-3%. Furthermore, here are the different business sectors that make up VOO, along with their approximate weightings within the ETF. Technology. This sector, encompassing companies involved in the development, manufacturing, or distribution of technology products and services, holds the largest weighting in VOO. Examples include Apple, Microsoft, and Nvidia. Financial services. This sector includes companies involved in banking, investment services, and insurance. Examples include Berkshire Hathaway Inc. and JP Morgan Chase & Co. Healthcare. This sector includes companies involved in pharmaceuticals, medical equipment, and healthcare research. Consumer discretionary. This sector includes companies that sell products and services that consumers may spend more on during a thriving economy, such as hospitality, entertainment, and retail. Communication services. This sector includes companies providing communication services like landline phone services, cellular phone services, and internet services, as well as those producing movies and television shows. Industrials. This sector includes companies involved in a broad range of industries, such as manufacturing, transportation, and aerospace and defense. Consumer staples. This sector includes companies that sell essential products that consumers regularly purchase, such as groceries, household products, and personal hygiene products. Energy. This sector includes companies involved in the production and/or distribution of energy, such as oil and gas companies. Utilities. This sector includes companies that provide essential services like gas, electricity, and water. Real estate. This sector includes real estate investment trusts, REITs, as well as realtors, developers, and property management companies. Basic materials. This sector includes companies involved in the sourcing, processing, or distribution of raw materials like lumber, concrete, and glass. The exact weighting of each sector within VOO can change over time as the S&P 500 index is rebalanced to reflect the economic influence and size of its constituent companies. It's interesting to note that if one sector of the economy is in a slump, it can be picked up by another economic sector. Thank you for your time, and please let me know what other topics you'd like to learn about and discuss. We are all doing our best to make smart financial decisions and live our best lives. A reminder that we are in this together, and the choices we make today impact our lives and future generations tomorrow. Like this video if you learned something new. Subscribe for more simple, smart personal finance content every week. What do you invest in monthly? Drop your answer in the comments and let's grow our money together.